So, when you look at the first couple of days of April 2026, it might seem like just another blip of market craziness. But if you look a little closer, there's this incredible story playing out. It's really a battle for the soul of the market, this constant tug of war between our immediate fears and our biggest long-term ambitions. All right, let's get into it.
And this right here is the heart of the conflict we're going to unpack. In one corner, you've got all the forces of fear, geopolitical crises, sudden oil shocks, and just that general nagging uncertainty they create. But in the other corner, you have the forces of the future, mind-blowing tech innovation, massive IPOs, and this really powerful belief in long-term growth. And for 48 hours, these two sides just went head-to-head.
So, let's start with day one, April 1st. This was a day when, optimism was clearly in the driver's seat. The markets kicked off the month with a really strong rally. You can see all the major indexes were deep in the green. And this whole wave of good feeling was being driven by something traders were calling Hormuz hope, this huge bet that the conflict with Iran was about to be resolved. So what was really behind all this positive momentum? Well, everyone was waiting for a big primetime speech from the president that night, and investors were putting their money on a very specific and very optimistic outcome. And this quote from strategist Steve Sosnick, it just nails the market's mindset. The big bet was that President Trump would get up there and announce a plan to reopen the Strait of Hormuz, which is, a critical pipeline for the world's oil. They were basically betting on peace, and they priced that bet right into the stock market. But get this, while everyone's focus was glued to the Middle East, a completely different story was breaking. And this one was pointing to a future that's, well, a lot more ambitious. On that exact same day, the news dropped that Elon Musk's SpaceX, a private company valued at just staggering $1.3 trillion, had filed the paperwork to go public. Now, SpaceX did this using what's called a confidential IPO filing. This lets a huge company like them quietly work out all the kinks with regulators before the big public reveal. Think of it like the first move in a really carefully planned dance to bring a private giant onto the world's biggest financial stage. And let's be clear, this is way, way bigger than just another tech IPO. I mean, SpaceX practically invented the entire commercial space industry. And they aren't stopping there. They're talking about space-based AI that's literally powered by the sun. With insane profit potential, this isn't just an IPO, it's a massive, multi-billion-dollar bet on the future of, well, everything. Okay, so now let's fast forward to that night and watch how that whole optimistic story completely unraveled. This timeline really shows you just how fast the mood changed. The market closes on this big high, right? But just a few hours later, the president gives his speech and nothing. No peace plan, no clear path to reopening the strait. That Hormuz hope that powered the entire day's rally, gone, just like that. And the reaction was, well, immediate and pretty brutal. By the next morning, futures were already pointing to a huge drop when the market opened. It basically wiped out all of the gains from the day before. The hope was gone and fear was right back in charge. And the reason why was pretty obvious. Oil prices, which had calmed down on all that hope for peace, suddenly spiked back up, heading toward $110 a barrel. That risk of a long, painful energy shock was suddenly back on the table, and it was very, very real. So this kind of whiplash, going from excitement about space travel to flat-out panic about gas prices in less than 24 hours, it really makes you ask some big questions about how we should even be thinking about investing for our own futures. In fact, this kind of crazy volatility is making some experts seriously question the most basic, most foundational strategy in all of personal finance, the classic 60-40 retirement portfolio. Yeah, for decades, this was the playbook, right? You put 60% of your money in stocks for growth and the other 40% in supposedly super safe government bonds. The whole idea was that bonds would act like a shock absorber. So if the stock market takes a nosedive, your bonds are supposed to be the stable part that cushions the fall. And hey, for a really long time, it actually worked. Look at 2008. Stocks got crushed, but treasuries rallied, and that saved a lot of portfolios. But then you look at 2022, and something just broke. Both stocks and bonds got hammered, making it the second worst year for the 60-40 strategy in 100 years. The safe part of the portfolio was anything but. And here's the thing, this might be the new reality. As fund manager Jerome Blockland points out, With government debt at these crazy high levels, you just can't count on bonds to zig when stocks zag anymore. That old, reliable relationship seems to be over.
So that leads to the big question. If government bonds aren't really safe anymore, then what is? Well, some people are now arguing that true financial safety lies in scarce assets, things that indebted governments can't just print more of. We're talking about a shift toward things like gold, Bitcoin, or even collectibles like fine wine and classic cars. And all this leaves us with one last thought. These 2 days in April really are the perfect snapshot of the modern market. It's this constant battle between short-term shocks, like oil prices, and these massive long-term ambitions, like colonizing Mars. And in this new world, it forces every single one of us to really rethink what risk and safety actually mean when it comes to our money.